And the government says an extra 7 billion rand will have to be raised over and above the current wage bill. And that's, of course, if we do go through with that increase. Could put pressure on the budget deficit, which reached, I think, 6.7% last year. It's been suggested that agencies might be re-looking then at our credit ratings. Is that something you'd be doing?
Well, look, I don't think there's immediate present danger that we would adjust the rating. The strikes, obviously, they've been disturbing, painful for some, but as such, the strike action, or what's been discussed now with regards to a settlement, is not going to make us change our mind immediately, but there are lingering concerns.
Of course, you have us on a BBB plus rating at this stage with a negative outlook. You've had us on that negative outlook for some time, and that's really to be there in a market where you see some risk. Is the strike one of those risks in your view?
I mean, you're right. We've been on a negative outlook now for some time, basically flagging a number of downside risks. We started with the negative outlook because of the market turmoil in 2008. Last year we had a recession. Now there is this whole story about like where is the fiscal side going to move to. And for that reason, I think for us a key document or key event in the economic calendar is going to be the tabling of the medium-term budget policy statement. And that for many reasons. I think it will be the first document that is actually going to show the hand of Finance Minister Pravin Gordhan. I think the last medium-term budget policy statement, the budget February, I think they were all kind of put together basically in many ways by the previous administration. And this document, this upcoming medium-term budget policy statement, I think in terms of policy direction is very important because it will be a document that will have Pravin Gordhan written over it all over. And then again now with the high wage agreements we've had now, and this is not the first time, we've had it like for years now, and Pravin Gordhan in the last budget was already saying there is less and less room to maneuver in the budget for these type of high wage agreements. We will have to look at this from a sustainability point of view. More and more expenditures are in the budget now that are non-negotiable, and wage and salary payments, higher interest bill, the social commitments and social grants, and that does certainly limit and reduce even fiscal flexibility for the government.
Well, Konrad, I spoke to the ETM guys a little earlier and they said that it would be nonsensical for South Africa to get a downgrade purely because we didn't get one during the recession. So we've gotten through the recession quite well. As you mentioned, the medium-term budget policy statement is relatively important, but could you give us an indication of how things will change and how bad they got during the recession?
I mean, you're right. We got through the recession quite lightly, and it was a short recession. It was 1 year. And the good thing now is that obviously we are seeing revenues coming in stronger, which has an impact on the bottom line, gives a little bit room to maneuver, at least for the near term. But the question is really not that much about this year or the near term. The question now really is about the medium term, what the medium term expenditure trends are going to be. And the question also is about, are there going to be new commitments in the budget that would limit discretionary spending for the government even further?
Well, back at the budget a few months ago, we had, of course, a budget deficit of 6.7%. Government plans to bring that down to 4% by 2013. Do you think that's at risk at this stage?
I mean, certainly that trajectory would be a good one from our perspective because...
So you'd be happy with that 4%?
That certainly would sort of, for us, go in the right direction because it would also basically it would help to control the debt dynamics because of the larger deficit. We've obviously seen debt rising again, and sort of curtailing the deficit, bringing it down to that level you just mentioned, would basically reverse the debt dynamics we've seen now for a year or two. Is it realistic? I think it really depends on some of these unknowns we have at the moment, including a continued rise in the wage and salaries bill, including a higher interest bill. And then again, one will have to see in the medium term or for the medium term, are there going to be further commitments that will lock in further non-discretionary spendings?
Of course, we don't know if that 7.5% wage increase has been accepted yet. The unions and governments are speaking at the moment. If it is accepted, do you think the government did the right thing? Do you think it should have held out and risked potentially damaging the economy by having a protracted strike?
It's always it is a tricky situation, quite obviously. I mean, the strike's been going on for quite some time now, and there's a perception damage. There is obviously damage to the economy. There's damage to individuals in a broader sense, and everybody's suffering in many ways. So there is a need to actually bring it to a conclusion. For government, I think it really will be important to see whether this is the end of it, or whether there is further pressure now on government to continue increasing social spending, continue increasing in the medium term wages and salaries and compensations even further.